Hello and welcome to India Business Hour. I'm Parikshit Luthra. Here are the headlines we are tracking this evening. From Australia to Europe to the United States to India, several airlines are grounded and businesses and government services affected due to a tech outage linked to Microsoft and cybersecurity firm CrowdStrike. The CEO of CrowdStrike apologizes for what is being dubbed as the largest IT outage in history. The Microsoft outage affects airline services at Mumbai, Delhi, Bengaluru and other airports. Airlines are forced to issue handwritten boarding passes and advise passengers of inordinate delays. RBI says 10 banks and non-banking financial companies faced minor disruptions. A few trading platforms and brokerages also faced interruptions and delays. For the first quarter, Reliance Industries clocks 12% growth in revenues year-on-year, driven by robust growth in the oil and gas, retail and telecom businesses. Profitability of the oil-to-chemicals business is muted due to a decline in gross refining margins for the industry. The company attributes depreciation for a 4% decline in net profits, but net debt to EBITDA improves.
Households are increasingly turning to other avenues for deploying their savings instead of banks.
Household savings are now going not into capital formation but into speculative activity.
Both the banking and market regulator are worried about household savings moving to financial instruments. RBI Governor Shaktikanta Das warns of liquidity issues due to slowing deposit growth. SEBI chief says it's time to consider if household savings are going into speculation instead of capital formation. Sensex and Nifty end in the green for the 7th week in a row despite a sharp sell-off on Friday. Midcaps underperformed the blue chips. Ultratech Cement declines in trade after posting a lower than expected number in the first quarter due to lower cement demand. Net profit grows to 1,695 crores and revenue rises to over 18,000 crores, representing small rises on a year-on-year basis. A lesser to cash-strapped airline, SpiceJet raises questions about its solvency and ability to continue as a going concern. Irish lessor has asked Delhi High Court to force the airline to disclose its assets. SpiceJet says it is in the process of raising 2,000 crore rupees by August.
Whether you're a young or old man or woman, Democrat, Republican or independent, black or white, Asian or Hispanic, I extend to you a hand of loyalty and of friendship.
Donald Trump formally accepts the Republican nomination for the American presidential race. Days after surviving an assassination attempt, says he will not let other countries come in, take jobs and plunder the nation. Also promises to lower inflation. A drone strike in Israel's capital Tel Aviv kills one person. Authorities probe why air raid sirens were not triggered. Israeli forces continue to bomb Gaza. 15 killed in a strike on a school where the displaced were sheltering. This is the 9th school to be targeted in the last 2 weeks. Also on the show, FMCG sector seeks income tax relief for the salaried class in the upcoming budget. Hopes it will boost demand. Also hopes that the government will create a roadmap on sustaining rural demand. The big story tonight is a worldwide cyber glitch which is being dubbed the largest IT outage in history. Blue screens with an error message on Windows workstations greeted thousands of people worldwide. Airports, airlines, banks and other financial service providers were forced to go offline. TV and radio broadcasters were forced to go off-air. It's turned out to be a Freaky Friday as a tech outage gripped Microsoft cloud services across continents. Microsoft has blamed it on an update from a third-party software provider. This outage is linked to global cybersecurity firm CrowdStrike and its latest software update. Services of several airlines were impacted by the outage. This includes Ryanair, American Airlines, Delta Airlines and United Airlines, among others. Services at airports in Australia, Spain, Germany and Netherlands were impacted as well. Airports across India saw long delays and serpentine queues. A passenger received a handwritten boarding pass in Hyderabad and shared the image on social media. The Reserve Bank of India said 10 banks and non-banking financial companies faced minor disruptions. Britain's Sky News broadcast channel went off-air for several hours of disruption, with a presenter saying the channel is operating at minimal capacity. Rachna Dhanrajani joins us now. It looks like a software update from CrowdStrike is the likely root cause, Rachna. What is the situation now and what are the companies saying?
Right. It was a fault with an update issued by cybersecurity company that led to a cascade effect among global IT systems, with industries ranging from banking to airlines facing outages. The cybersecurity firm in question is CrowdStrike. It develops software to help companies detect and block hacks and is used by many of the world's Fortune 500 companies, including major global banks. And so on Friday, when an update failed to get through, it created a glitch only specific to users of CrowdStrike using Windows as the host machine. And so millions of users, including banks, healthcare companies, airports and airlines, witnessed the blue screen of death. Now, CrowdStrike's software requires deep access to a computer's operating system to scan for threats, which is exactly what happened. It tried to run the update with its deep scan approach, but machines running Microsoft's Windows operating system crashed due to a fault in the way the update interacted with Windows. The global outage lasted about 7 to 8 hours. It was all resolved, but during the outage in the US, apart from airlines and broadcasters, even 911 services were impacted, whereas in the UK, major railway networks were down, and so was the London Stock Exchange. In New Zealand, the parliamentary computers were affected, and in Australia, the biggest bank, the Commonwealth Bank, was unable to transfer funds. In India too, like you said, we saw the impact on airlines at major airports, which then switched to manual check-ins and boarding process. This led to travelers receiving handwritten boarding passes. We also saw the outage hit brokerage firms during market hours, and so unfolded the Freaky Tech Friday, all because one update gave rise to a glitch, but now the services seem to be returning to normalcy across the globe, as Microsoft has confirmed that the issues are now resolved. But this incident did lead to CrowdStrike dragging on the Wall Street, with its stock opening in the red, down about 12%. CrowdStrike CEO George Kurtz said that the software issue was identified and fixed. Here's what he said.
System was sent an update, and that update had a software bug in it and caused an issue with the Microsoft operating system. And we identified this very quickly and remediated the issue. And as systems come back online, as they're rebooted, they're coming up and they're working. And now we are working with each and every customer to make sure that we can bring them back online.
Right, on the earnings front now, it was the turn of heavyweight Reliance Industries to post its first quarter numbers, and the company has turned in a steady performance across segments. Consolidated revenues rose 12% year-on-year, driven by robust growth in the oil and gas, retail and telecom businesses. Profitability of the oil to chemicals business was muted due to a decline in gross refining margins for the industry. The company attributes depreciation for a 4% decline in net profits. And we also see the net to EBITDA has improved. Our team of research analysts is standing by to break down those numbers. Sonia, let's start with an overview from you.
Well, thanks a lot for that. It was indeed a steady set of numbers coming in from Reliance Industries. The consumer-facing businesses have seen a steady growth this time around. Both telecom and retail saw an improvement. However, the oil-to-chemicals business was lower, but that was on the back of weaker macros. So let me just take you through the consolidated numbers. Revenue growth of 11.5% is what the company has seen this time at 2.32 lakh crores on a consolidated basis. That brings us to the EBITDA, which has seen a 1% growth coming in at 38,765 crores. Year on year. The margins were a tad bit under pressure. The profits were down about 5.5%, but that was largely because of the oil to chemicals business. The other businesses had a steady state growth. Reliance Jio saw an improvement in the average revenue per user and subscriber base year on year, and the balance sheet of the company has improved. The consolidated EBITDA was marginally lower at 1.12 lakh crores. But let's take it straight to the consumer facing businesses. Over to Rima to talk about the telecom business. Rima, over to you.
Thanks so much for that. As you pointed out, it's another steady quarter for Reliance Jio, in line with street expectations. The company's revenue growth has come in at 2% quarter-on-quarter, 10% on a year-on-year basis. And if you just look at that year-on-year, track record for the last so many quarters, the revenue growth has been 10%, which is why we're saying it's in line with expectations and very, very steady. EBITDA margins have expanded by about 20 basis points to 52.6%. Margins too for the company have been steady around this particular level. Profits are up 2% on a sequential basis. The subscriber addition stands about 8 million on a quarter-on-quarter basis, slightly lower than what we had in the prior quarter. The net subscribers now stand at nearly 490 million, with the 5G users coming in at 130 million.
Well, that's about the telecom space. But if you look at the Reliance retail business as well, in absence of the festive season and in the presence of heat wave, the business has done actually quite well. 8% revenue growth year on year, taking the retail revenues to around 75,630 crores. And the EBITDA actually did one shade better. The operating leverage is actually playing out. EBITDA grew by about 10.5% to a level just under 5,700 crore for the retail business for the first quarter itself, taking the margins to 7.5%, which is a 20 basis points improvement over the same time last quarter, making it the 7th straight quarter where the retail business margins have been 7%. Store additions, store expansion and footfalls, along with a lot of their new retail businesses, all of them doing extremely well, telling you that it is another stellar quarter for Reliance's retail business. All the consumer facing businesses doing extremely well as well. Let's go across to Sonal now for the oil to chemicals business.
Okay, all right, let's talk about the oil to chemicals business first. Big business for them, but remember, we are talking about it at a time when the macros were not favorable. So if we look at the revenues, yes, it has increased on a quarter-on-quarter basis, but the EBITDA has declined on a quarter-on-quarter and on a YY basis. It has come in at 13,093 crore rupees, but it is largely in line with what the street was working with as well. O2C EBITDA margins are 8.3%. They compare with 11.8% on a sequential basis. But the company does say that lower transportation fuel cracks is something that impacted margins in O2C business. The EBITDA is down 14% on a YY basis, down 22% on a quarter-on-quarter basis. But the energy market volatility is something that impacted, but structurally the business remains strong. So that's about oil to chemicals. But let's talk about the oil and gas business now. Strong set this time around. Their EBITDA has come in at 5,210 crore rupees, which remember is an increase of 29% on a YY basis. Margins have come in at 84.3%, which compares with 86.7% on a quarter-on-quarter basis. But their production in KG Basin has gone higher by 44%. And this is offset by lower realization. Gas prices have been going lower, and that is something which has impacted their EBITDA margin this time around. Their KG D6 production this time has come in at 28.7 MMSCMD, and that is a strong number. So all in all, oil and gas was strong, but oil to chemicals, because of macros, did see some decline this time around. Back to you.
IT major Wipro reported a disappointing set of first quarter numbers while revenues misses street. The guidance for the next quarter also came in lower than estimates. Wipro CEO said that the second quarter was looking better than quarter one.
Your guidance of -1% to +1% still leaves the door open for negative growth in the next quarter in Q2. Why is that?
So, okay, I think all I can say, Rima, is I want to repeat the point you said. In quarter two, going into quarter two, we have starting at quarter two, we have a better visibility to where we see how our revenue will be and how our margins will be compared to where we started in quarter one. Second, like I said, Americas 1, Americas 2 and Capco, I did give you a color into where we are. There is definitely softness in both APMEA and Europe. In APMEA, we are re-looking at our strategy. As far as Europe is concerned, we have a very good pipeline, and our focus is to do the conversion. I think that will give us, move into quarter three and how we will look then.
The flight of capital from household savings to other financial instruments has the RBI governor and the SEBI chairperson worried. Both the regulators spoke at different events today where they shared these concerns. Speaking at a Financial Express event, Governor Shaktikanta Das said slowing deposit growth can create structural liquidity issues. SEBI Chief Madhavi Puri Butch said it's time to consider if household savings are going into speculation instead of capital formation. Speaking at an SBI mutual fund event, SEBI Chief said that the surge in volumes across futures and options is now a macro issue and not just a micro issue of investor safety.
Household and consumers who traditionally leaned on banks for parking or investing their savings are increasingly turning to capital markets and other financial intermediaries. While bank deposits continue to remain dominant as a percentage of financial assets owned by the households, their share has been declining, with households increasingly allocating their savings to mutual funds, insurance funds, and pension funds. To be precise, households are increasingly turning to other avenues for deploying their savings instead of banks.
Micro objective of protecting the individual investor has changed and morphed to thinking about the macro issue of saying, is this what our market is designed to do, to basically facilitate a lot of speculative transactions? Or at a macro level, are we worried that household savings are now going not into capital formation, but into speculative activity? What has changed over the 3 years, the facts that have changed, is it has gone from being a micro issue of an investor to a macro issue of the economy itself.
The worrisome rising trend of more and more retail investors trading in the F&O space is also the reason behind SEBI's latest white paper proposing a new asset class. Remember, the consultation paper wants to create a new product that will fall between mutual funds and portfolio management services, offering retail investors a little more risk than mutual funds, but without being as expensive as PMS.
Every time we introduce something new, it's because we say we recognize that there is a market demand for it. We need to give a good regulated environment to the investor to meet that demand. So it's clear to us the investor wants to take derivative positions. Why are we leaving him without an option to do it through a professional fund manager? So that was one of the factors that drove that consultation paper.
SpiceJet is facing legal challenges over its inability to pay its partners like aircraft lessors. One such lessor has raised questions before the Delhi High Court about the solvency of SpiceJet after its auditors made some serious observations regarding the airline's financial state. The lessor has raised questions about the solvency of SpiceJet after its auditors claim SpiceJet's net liabilities exceed assets by over 7,100 crore rupees. SpiceJet said it is in the process of raising 2,000 crores by August. The court has deferred the hearing in this matter to the 25th of July. Coming up on India Business Hour, FMCG sector seeks income tax relief for the salaried class. This upcoming budget hopes it will boost demand. That and much more on the other side. Welcome back. We are counting down to Budget Day on the 23rd of July, and ahead of that, we are bringing you the India Inc. wish list. After years of weak rural demand, high inflation and low volume growth, India's FMCG industry is starting to see some green shoots, but the industry says a sustained revival in demand will need some help. CNBC TV 18's Shilpa Ranipeta reports that players are looking to the Modi 3.0 government's first budget for measures that will boost consumption and put more money in the hands of consumers.
For several quarters now, growth has been elusive for India's consumer companies. Rising input costs have been eating into margins, and high inflation has meant rural and middle-class consumers, who make up for the sector's largest customer base, have been buying less. This has resulted in low single-digit volumes. Players hope the government will use the budget to give some income tax relief to the salaried class, which could boost consumption by leaving more money in the hands of the consumer.
I'm sure there will be certain steps taken to drive consumption. Firstly, I think steps which are there in the form of perhaps giving relief to the salaried middle class. I think the government has taken significant steps in terms of giving free rations, which is there in the free food grain scheme, which has been extended. It needs to be extended beyond a certain period of time because that helps in controlling inflation and gives I think money in the hands of the common man.
Weak rural demand has been the industry's biggest pain point. Data from market research firm Nielsen IQ shows that rural consumption declined for at least 6 quarters since 2021 before turning positive in the first quarter of 2023. However, a meaningful revival has still not set in. For this, FMCG companies blame rising food prices. So expanding welfare schemes like the PM Kisan and job guarantee schemes like Manrega are a big ask.
There's a need for rural consumers to get some kind of stimulus so that the cycle kicks off, because once they get it, they start spending, the rural economy takes off. We have got some excellent over the last few years. So much work has been done on direct transfers and the ability to go to banks. So something like PM Kisan, if it is expanded, will certainly from a consumption point of view be a good thing.
Given that cost of everything has gone up, what CII is recommending is that the amounts through direct benefit transfer, the amounts through Manrega and income tax at the lower end, below 20 lakhs, there should be some relief in, and all the other areas should be increased. As far as infra spends are concerned, we are also talking about, putting greater indexation to spends in the rural area.
While these may help in the short term, the industry hopes the budget will have a roadmap that will keep this rural revival alive for a long term.
To solve the rural angle on a more sustainable basis, the issues of both agriculture and empowerment of rural economy through skilling, etc., and very aggressively start working on building resilience, because the biggest culprit at this moment in the recent past on rural incomes has been the weather event.
I think there has to be long-term steps to improve agricultural productivity, because that also, and also encouraging, I think the government is encouraging also in terms of certain crops, like if you ask, if you look at how they're encouraging millets and other things, and maybe manage the import bill. I think oil seeds is one area where we significantly import a lot. And therefore, these are the long-term strategic steps that needs to be taken in terms of, managing inflation.
Experts say a boost in the budget will accelerate the green shoots that are starting to become visible in rural demand.
FMCG manufacturers want the government to address employment generation as well by focusing more on infrastructure development. They also hope for incentives to attract more private sector investment, maybe through more PLI schemes will come through. This, they say, will help create more jobs and eventually lead to better consumer sentiment, increased consumption and overall economic growth. In Mumbai, Shilpa Ranipeta.
India's air cargo industry is booming, but players in the space say that they need a lot of help from the government to keep the boom going. CNBC TV 18's Danish Anand reports that the focus on infrastructure in Tier 2 and Tier 3 cities, a simpler tax regime and cheaper access to funds is just the start of their budget wish list.
India's aviation sector is soaring high, having become the third largest in the world. So is India's air cargo market. Data from Airports Authority of India shows that in FY24, the sector recorded a 7% year-on-year jump as volumes grew to 3.4 million tons. This volume growth was aided by a 10% jump in international cargo operations and a surge in the e-commerce business in the country. But for this performance to continue and improve in FY25, industry says it needs government support. And if this support comes in the upcoming budget, even better. At the top of the list is better infrastructure in Tier 2 and Tier 3 cities.
We want Tier 2, Tier 3 city airport networks to get really at par with the metros. Because today production has moved to hinterland. It's no longer in the major metropolitan cities of India or the other big cities of India. Because of cost, it's moving into the smaller cities. And what you need is the logistics infrastructure to be very close to the point of production so that it's quick and it's easy and it's cost effective. So if that happens, the government needs to invest more in the Tier 2, Tier 3 city airports with right cargo infrastructure, equipments, and more importantly, workforce. We need customs, we need all the PGAs to be there 24/7.
Players also add that the lighter compliance burden and a cheaper and easier access to capital will help in implementing expansion plans, especially those of their clients, a large chunk of whom belong to the MSME space.
Our industry is operating with about 90-95% people in the MSME sector. Now, for them, the cost of capital is very high. So, from the government's point of view, we need, processes which are simpler, which are easier. Like, we have GST refunds which need to be processed much faster electronically, not manually. Because for the service sector, GST refunds are being processed manually till now. I will give you taxes, I will do everything. But rationalization and simplification of tax regimes, lower corporate taxes, maybe rationalization of GST structures for the air cargo industry, which is hugely affecting us at 18%.
Players are also hopeful that the first budget of Modi 3.0 government will give them something to cheer about. Because so far, the government has been making the right noises.
Government of India can facilitate infrastructure creation. For that, the bulk of the infrastructure is created in the PPP mode, which is done by the major airports. The other set of infrastructure in Tier 2 and Tier 3 cities is being done by our own entity, the Airport Authority of India, and the I-Class, which creates the cargo infrastructure. So we are taking care of the whole thing, and we have our eyes on the future. So we are creating an infrastructure and facilitating the policy framework so that we are primed for the future.
With the aviation sector booming, cargo is being carried in the belly of passenger aircraft, and the industry feels that the sector will see tremendous growth in the years to come, especially given the fact that Indian Airlines have over 1,000 aircraft on order. They say that the government's vision of achieving 10 million tons in air cargo volumes by 2030 is achievable only if there are certain announcements in the upcoming budget which can provide fillip to the sector. In New Delhi, this is Danish Anand for CNBC TV 18.
With that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC TV 18.